Well, let's pick up some of those points with Victoria Scholar, the head of investment at Interactive Investor. Victoria, welcome back. Good to see you. I mean, it had seemed, though, investors were getting used to President Trump's tariff threats and all the market reaction to them was becoming a bit more muted. But Friday's post lopped $2 trillion off U.S. markets. Why and what's changed?
Well, I think they are getting used to Trump's tariff threats. I mean, just look at the size of the Liberation Day sell-off versus what we're seeing today. Yes, markets sold off on Friday with tech bearing the brunt of the declines, but price action today has turned a lot more positive. European markets closing higher and the US markets rebounding too on those Trump comments. I think Trump has been trying to ease concerns about those U.S. China trade tensions, and it's really that classic taco trade. You know, Trump always chickens out. He's posting saying there's nothing to worry about with China, it's all going to be fine. So that's sort of a buy the dip signal to investors, suggesting he's not actually going to follow through with that 100% tariff threat. But as we know, the White House is extremely unpredictable, and that causes ripple effects across markets.
As you say, I mean, this is all uncertainty that drives investors' concerns and drives some of them to gold. Is that a trend that you see continuing, or will markets adapt to all of the back and forth and simply get used to the risk?
Yeah, I mean, we've seen that precious metals continue to scale fresh highs. Gold up another 2% today, like you said, pushing above that 4,000 level on Friday. Its 8th weekly gain. Silver up even more, up over 6%. So there's a big kind of broad-based rally across the precious metals. And it's really that flight to safety trade that continues to propel precious metals higher because of Trump's unpredictability with this threat of tariffs, but there's also the weakness in the US dollar that has underpinned gains for the precious metals too, as well as the potential for further Fed rate cuts and central bank buying. So there's a lot of reasons why gold and silver have been going up. There's also the US government shutdown as well. That provides further uncertainty. So to think that gold wouldn't have further to run from here, you'd have to be quite bullish. There's a lot of reasons to be bearish at the moment, and that's why we're seeing that investors are keeping at least part of their wealth, and they're pinning hopes on further gains for gold and silver.
Well, let's talk about Bitcoin then, because it's often been called digital gold. Tariff tremors have sent gold to new highs, as we've been saying. Bitcoin has plunged. Why do you think that is?
Well, we saw that there was that big sell-off in the cryptocurrencies on Friday, caught up in the selling that we saw for the NASDAQ, the Bitcoin falling as much as 10% over 5 days last week. But remember, it hit record highs at the beginning of last week, climbing above $125,000. So valuations were very stretched. And now we've seen this pullback. So quite big movements, quite a lot of volatility there. So for those that argue that Bitcoin is a gold replacement or a substitute as digital gold, that theory doesn't really seem to be panning out. It seems to be acting more as a risk asset correlated more closely with some of the riskier parts of the equity markets, like tech stocks. So we've seen that when equities sell off, Bitcoin tends to sell off too.
Victoria, good to see you. Thanks so much for coming back on the programme. Victoria Scholar, Head of Investment at Interactive Investor.